Hello, guys. Good morning, good afternoon, and good evening from wherever you're watching from. And once again, welcome to my channel. My name is Akilo Kazim. I'm a forex trader, investor, and also an entrepreneur. All I do on my channel is teach about the forex market, not just the volatility market, not just the index market. I teach about so long as it's forex, so long as it's trading, anything trading, we teach about it. So if you know you're interested in that, if you know that's why you're here, please click on the subscribe button. Then after that, click on the notification icon there. Good, that's the bell one. Good. So with that, anytime I upload another video, another useful video, I promise you can ask people that will be following my channels. Any video we upload there is always almost useful. So just do that. So anytime we upload any video, you get notified and you become one of the first people to watch the video and make use of it. Okay, fine. So we're going straight into today's strategy. Actually, why I'm coming with this strategy or why I'm coming with this video today is because of a lot of questions a lot of people have. Because most time we do video, we don't just do video because maybe we just want to upload something. We do video based on the feedback we get from our former videos. We do videos based on the people's reaction because we have classes running, we have class where we teach people. So when we notice a particular question always coming from majority of the students, we try to do a video on it because we believe since most of our students can have such questions, probably a lot of people also online we have same question. So that's why we do most of our videos, and that's why I say it's always useful because it's from people's opinion, people's questions, we get the mind or we get the ideology to do our video. So today we're going straight into how to trade the boom and crash. Though our next video coming up, we have to trade the volatility, the VIX 25, the 50, the 75, the 1 seconds, everything VIX. That'll be our next video. So that's why you have to subscribe to this channel so you can get updated whenever we drop the next video. Okay, so today we'll be going into how to trade the volatility, how to trade the boom and crash market. First, as a normal trader, we always say before you trade, you always take note of some major important thing. First, what's the first one? Once you open a chart like this, you ask yourself, which trend is this market? Is it an uptrend, downtrend? Is it ranging? Is it consolidating? So that's the first question. So once you get that one, then let's say you meet the market when it's in uptrend, please try to take note of whatever I'll be saying now because it's very important. If you can just follow it through, believe me, you're already ahead of 90% trader that end up losing in the long run in trading. So once you ask yourself, okay, which trend is this? If you're able to get the trend of the market, then you ask yourself, okay, let's say it's an uptrend now. Then you ask yourself, is it on any supports? I'm sure you know what is support, you know what is resistance. If you don't know still, our information will be given in the link so you can contact us. We have classes running for both the basic class, we have the intermediate class, we have the post class. You can just let us know so we give you the details on how to join. And again, if you want to have a one-on-one video, we have a video section where we teach people how we trade. You see us trading our live account, you see how we trade market, you see about everything. We do a Zoom video and make sure everyone is following. So if you want to become part of it, our information will be given in the description below. So just check it out and contact us. We'll give you the information. Okay, fine. Let's go straight. Okay, now that you've known, okay, let me say it's not supports. That's the only time you should buy this market. Don't just buy wrongly because that's what most people do. Most people they gamble their market thinking they're actually trading. You're not trading, you're gambling. So the moment like you just buy the market, maybe with the option, with the mind, okay, it will go up. Then maybe you feel like, okay, let me just say, let me see what will happen. No, this is trading. You don't gamble. So once you know, okay, yes, now it's an uptrend, what you do, you look for support or you look for the nearest support. Once on the support, you say, okay, now I can buy the market. Then you know where your stop loss is. Those that be following my channel, you know I don't talk about trading without stop loss because it's very, very important. I even prefer the stop loss to take profits. Most time I use stop loss, I don't use take profits. What I do is I trail the market. I use trailing stop. So but my stop loss is very important. I make sure it's always there. Okay, now so let's go straight into trading. Okay, now let's say I made the market in this case. I think I saw one uptrend there. This is an uptrend. So now, if I in a better view, let's do this. You can you can see this now. Just for those that don't have laptop, I think with this now you can see a better, bigger picture of the market. Okay, let's say you meet this market in this form. How do you know when the market is in uptrend? How do you know when it's in downtrend? That is why I introduced this 200 period moving average. That's what you use to know when the market is in uptrend or in downtrend. I repeat, you use the 200 period, which is the red moving average, to know when the market is in uptrend and when it is what? Downtrend. That's it. Okay, now, so anytime you see the market above the 200 moving average, you know the market is currently in uptrend. If it's below it, you know it's in downtrend. And if you see the market just moving along it, like, okay, let me look for a ranging market. I think the coin market, yeah, something like this, good. As you can see here now, this coin market now, the market is currently ranging. Just if you can look at this over here, the market is just ranging. It's neither going up nor coming down. It goes up for a while, comes down for a while, goes up. So in this market now, how to trade this? All this is what we'll be talking about today. We tell you how you trade the market, no matter the condition it is. Okay, so let's go back to the normal stand. Okay, so now you've known type of market you can meet. Okay, let's say now it's on uptrend. Let's go back. First, that means it's above what? Our 200 period moving average. So now that's where we now go to our 50 period, which is a blue moving average. That stands our support or as our what? Resistance. I repeat, the blue moving average represents either our support or our what? Our resistance. So first, if it's above the red moving average, which is 200 period moving average, that means what? You look for only buy opportunity. I repeat, if it's above the red moving average, you look for only buy opportunity. And if it's below the red moving average, you look for only sell opportunity. So how do you look for this opportunity now? That's where our 50 period moving average comes in. It's, as I said, it serves our support in moving in buy market, and it serves our resistance in what in sell market. That is in downtrend. So now, as you can see it here, let's say you meet the market somewhere like this. Let's say you meet the market somewhere like this. Anytime the market gets close to the blue moving average on the main chart, you buy the market. I don't advise people to buy the market just after the first spike, because it can skip what it can still give you a lot of ticks back to this blue moving average before it ticks up, and at times it will still come down to this 200 period moving average before it spikes. So that I say it's better when it's close to the blue moving average, then you buy the market. Then your stop loss will be below the red moving average. Please don't get it wrong. I say you buy the market once it's close to the blue moving average with your stop loss below the red moving average. Always know your stop loss is very important, as I said earlier. So you don't enter a trade without a stop, because you might leave the market unknowingly to you. At times I forget my trade, just coming by and it is my stop loss, or what? It is my take profit. At times just keep running in profit. Why? Because I use a trailing stop. So except it come down to where my stop loss is, that's when it can work. And so that's just it. So now let's say I'm sure you already know how to trade the buy market now. Follow what I just said. It's that simple. Once it's above the 200 period, which is the red one, you look for a buy opportunity. Add it for the buy opportunity. You wait for the market to come close, which is the ticks, the small one, to get close to the blue moving average of the main chart. Then you buy the market. Then the reverse works for the sell market. Let's look for a sell, a downtrend. Okay, I think it's a downtrend there. So as you can see it here now, let's say you meet the market here from this point here. That's where it's now below the moving average, the red moving average. So at this point, now look for sell opportunity. At this point, now if you see when the spike got to this blue moving average here, it sold the market. So you can sell this market. A lot of people might say maybe where you might take profits, where you like put my stop loss. Your stop loss is always in this sell one now, to be above the red moving average. That's where your stop loss will be, above the red moving average, is 200 period exponential moving average. And so that's where it will be. So that's just how to buy or sell in a downtrend or an uptrend. So let's go into ranging market. Let's say you meet the market in a range. I think in the current one is currently ranging. Where is the current market? Okay, this is the current market here. Good. Let's say you meet the market now in this form. In this point now, it's currently ranging. So now, how do you know if to buy or how do you know if to sell? That's where you introduce this our shapes. I use this, put it there. You can see that's where the market, this red one here, this red one I'm talking about. You use this. At times it can be down thing, it can be just down range, like just moving that, but it's not that, it's not a down thing, it's not an up trend, but it's just moving like this one now. You can, this is all moving in horizontal. It's like moving in a horizontal line. So what you do is you use this your horizontal line now to just, if it's down trend, you use the word the thread line to mark the major support or the major resistance. So once it's get now to this one, what you do, you sell the market. Then when you now come to say where to buy the market. For me, naturally, I tell people if the market is ranging, you stay out of the market. But if you must trade, because some people they just want to make money, like they just feel like, let me make this money, I beg, let me make this money. Okay, I think this doesn't work here. This is what I talked about earlier. I said then you use what? You use this. Good. So with this now you can be able to join some good point. Let's see, this is it. Okay. So next thing I meet the market somewhere here. After a little touch, assuming you meet it at this point now, it doesn't start ranging. This will start ranging. Good. Remember the range, that means the moving average will be in the middle. Don't get this wrong, please. The moving average will be in the middle. As you can see it here now, the moving average just in the middle. It's neither up trend nor down trend. The market just going up, coming down, going up, coming down. So it's not above and it's not below, or it's above and it's below. Let anyone want to put it. So please try to understand this market very well, because if you're this is what I'll be using, I'll be working for me. So that's what I'm bringing it up to everyone to learn from it. But still, if you want to see maybe how to trade it, if you want to see how to trade the main forex, the currency market, if you want to see how to trade the volatility market live, like we'll be trading it right before you, you can contact us at our number, and information is given in the description below. So just let us know. We give you the needed information for you to join our company, our group. In that way, you can see exactly how it's traded and how we do it. And I will tell you everything because you're seeing it. There's nothing hidden about it, because a lot of people feel when they are trading, they don't tell you this, they don't tell you that. You see how we do it. We tell you the reason we're entering the market. We tell you the reason why we're leaving the market. So if you want to do all that, you can just contact us with our email, our number, WhatsApp number is given below. And first, if this is your first time in this channel, if you've not subscribed, please click on the subscribe button. After that, click on the bell icon. That way you get notified anytime we post any other useful video. And after watching this video, I always say is after watching the video, if it's useful, please give it a thumbs up, and if it's not, give it a thumbs down, so we can be able to analyze how far we're going with the channel, so we know if people like more of this video or they want less of this video. If you want more videos like this, just give it a thumbs up, so in our next video we can also do something better than what we just did now. Okay, so I think this will be ending it for today. I think if you have any question, complaint, or suggestion, just drop in the comments box. I'll answer you as soon as possible. So that's all for today and for now. Let me just summarize everything. As a summary, I said, want to know the trend of the market. If the market is above the red moving average, which is 200 period exposure, let me just, I think it's important I do this. As you can see, this is 50 period, this is 200 period exponential moving average. Once you've done this, sorry, it's exponential, you've done it, then you could just, I'm just showing you, I'm not changing anything. Then this is a 50